The pound versus US dollar continues its move to the downside as trading new session lows in the current hourly bar, current 4-hour bar. I'll talk about that in this video, so let's get started. The history of this pair has been more negative ever since the price started to move below this cluster of moving averages here. We have the 100-bar moving average on the 4-hour chart, the high one at this point, the 200-bar moving average on the 4-hour chart, and then the 100-day moving average. All of them are clustered here together, and as you can see, we found willing sellers against these moving averages right through here. And then we saw a big move to the downside, a corrective move to the upside. Again, found support seller resistance sellers against a 200-bar moving average here in this week right here, which was last week. We found resistance sellers against a 100-bar moving average on the 4-hour chart. And in last week's trade, we also fell below the 200-day moving average. All these moving averages that dipped below those levels increased the bearish bias for the pair and has led to the increased momentum to the downside. This week's trading, we saw sellers more near the 38.2% retracement and also near the swing lows from here and here. Those two swing lows formed a nice double bottom right here and here, which led to sharp moves to the upside, sharp moves to the upside. So the break below that level was an additional move to the downside, giving the sellers more momentum. Now on the downside, we are approaching some support targets. In particular, the most important, I think, are right here, here, and here. This is a swing area going back to this level right through here, or this area right through here, where we had a ceiling. Yes, we moved above it, but we tried to stay below it over this 3 or 4 week period. We moved above it and below it here, and then based off of it and moved higher here. So this area between the 129.70 and 129.88 is going to be a key target on the downside, followed by the 50% retracement of the move up from the low price from January of 2025 to the high price that we saw in the month of, I guess that's June or July. 50% comes in at 1.29433. That's going to be another key level. So watch this area right here. We could see a battle going on between both the buyers and sellers as the dip buyers stick their toe in the water. Sellers may take some profit against this level with the stop below. But what we know is if the price moves below the 50% retracement, then the bias increasingly is in the favor of the seller. So be aware of that. Do not fade that move. Expect further selling on a break of that. Absent that, and we find support buyers against this, we could see a rebound up, but the old 38.2% retracement, this old double bottom right here, is going to be the key resistance on any sort of move back to the upside, so be aware of that as well. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.